this webinar just in case you need to watch it later. Okay. So yeah, I'm going to repeat that again. That we know that a trend is made up of a series of lower lows and lower highs for the case of a downtrend. Okay. So this downtrend will keep on being a downtrend until we break both previous lower lows and lower highs. Okay. So if we break these previous lower lows and lower highs, this tells us that this trend is no longer bearish or is no longer a downtrend, but it has shifted into being an uptrend. Okay. And to break this previous lower highs and lower lows, price has to be very strong. Like it takes a lot of effort and energy to break a trend or to shift the direction of a trend. Okay, hence getting the impulsive move. Now the impulsive move, as we have discussed earlier, it is the first phase of a new trend. Okay. Is it clear?
Yeah.
Okay. So for the case of this is for the case of what was previously a downtrend that has shifted into an uptrend. That we have to break both the previous lower lows and lower highs. We have to get a candle closing above the previous lower lows and lower highs. This principle is the same across all pairs and across all time frames as well. Okay.
Okay.
Yeah. So okay. So this was for the case of a downtrend. Now, what of an uptrend? So if we have an uptrend, that means we are making a series of highs and lows. Higher high, higher low, higher high, higher low, in which every high is higher. Okay, it's much higher than the previous one. Okay. So this is what we would call an uptrend. Okay. So what would tell us that this has broken, this trend has shifted from being an uptrend to being a downtrend? The only thing that would confirm that is if we get a kind of full closing below the previous both higher high and higher low. Okay. Okay. So the vice versa for a bullish trend, the vice versa to what we talked about on a bearish trend, whereby breaking a trend or a trend shifting its direction from being a bearish trend to a bullish trend, we had to get a kind of closing firmly above the previous lower lows and lower high. So for the case of an uptrend, we have to get a candle closing strongly below the previous second last lower high. Okay. Is it clear?
Yeah, so we broke the lower high and the lower low, so now it's a reversal.
Yes, so that tells us that now the trend has reversed from being a bearish trend to being a bullish trend. And for the case of a bullish trend, breaking the previous higher highs and higher lows is what tells us that now we are shifting the direction of the trend from being an uptrend to being a downtrend. Okay. So if that is clear, let's look at some examples of that. Okay. So for example, if we look at Euro USD, Okay. From this point, we see price was making a series of lows, lower highs, and lower lows. Okay. We made a lower high and a lower low. Lower high, then we made a new lower low. Okay. So this was the last lower low. This was the second last lower low, and this was the last lower high. Okay. This was the last lower high. So price making a strong break, and this kind of closing above the previous lower high, okay, is what tells us that this trend is no longer bearish, but it is now bullish. Okay, even when price hasn't touched the trend line yet, because okay, other people will have a trend line. Okay, other people will have a trend line here and wait for the trend line to break to confirm that the trend has shifted. Okay, but that is not the case. Okay, the only first and most important indication is getting a candle firmly breaking the previous lower highs and lower lows, and getting a candle fully closing above, like what happened here. So price broke the previous lower highs and lower lows. Okay. This is what. Hello?
Okay. Hello.
Hey. Are you there?
Hey, we disconnected.
Well, probably, no,
I think
probably the network, but can you see my chart?
I cannot see your chart.
Okay, let me know once it shows up so that we can continue.
Okay. Okay, I can see your chart now.
Okay, so this is what tells us, or this is what shows us that the trend has shifted in direction from being a downtrend into becoming an uptrend. And you can see price went on, okay? Price went on to essentially break this downtrend and continue being bullish, okay? Where we got that strong impulse and eventually the liquidation, and we got the continuation, okay? So, so other people would be waiting. Hello?
Hello, you keep disconnecting.
Yeah, I wonder why that is. I don't know why.
I don't know. It was perfect. It was perfect, and then it started. Your audio started cutting, and then you disconnect.
I'm not sure why that is. I don't know. Could be connectivity. I don't know, or the application. What other apps do people use for webinars?
I've always used Zoom with like if I ever connected, I usually would connect with and like Wix Don't Lie and Uncle Ted, that stream. They did Zoom and stuff like that before, but they use YouTube, and they use do you use Discord?
I have an account, but I've never used it. I've never used it for a webinar.
Okay. Discord and YouTube are the only other two that I know of.
Well, Zoom has always been great. I don't know what's up today. Anyways, let's just continue and see what happens.
Okay.
Okay. Can you see my chart?
Yeah, you were saying that we were in a downtrend, and then we broke the lower low and lower high. We would begin the bullish ascent, and then we broke the downtrend line, the trend line.
Yeah, so I was saying that, okay, other people would be waiting for the trend line to break and stuff, but by waiting for all this to happen, you're leaving a lot on the table. Like, so you would be able to take advantage of this bullish trend all the way from the start, okay? Because the break of the previous lower highs and lower lows is what shows a change in direction, okay? So yeah, now for the case, okay, so for the opposite case, if it is a bullish trend, if we take a look, for example, we seem to have something of a retracement here, or an uptrend, although short term, okay, where we're making a series of highs and lows, okay, a series of highs and lows. So the break below the previous higher highs and higher lows is what shows. Wait, this is not a very good example. Let me look for another example. Okay, this is an example from. Let's look at Euro New Zealand. Okay, even if we just look at it from the daily time frame, okay? So if we look at this area, okay, so we have an uptrend, okay, where we started with an impulse. This impulse or this change started by breaking these previous highs and lows, okay? So this is what tells us now that price has shifted from being a downtrend to an uptrend. Then we got the liquidation, and from there, price continued in its original bullish direction, so to say. Okay, if we can put it from there, maybe just to be clear or something. Doesn't really matter where you put the trend line. Okay, but after breaking the previous lower highs and lower lows, okay? So we had this high, we had a high here, then we had a lower high and a higher high, then we broke below, okay? So breaking below this lower high and lower low is what now tells us that, okay, price has now shifted from being an uptrend into being a downtrend, okay? If we look back, here you can see that, okay, we had an uptrend where we were making a series of higher highs and higher lows, okay, higher highs and higher lows. Then price impulsively broke below, okay. So this is what the break below the previous lower highs and lower lows, like seeing a candle closing firmly below the previous lower highs. I mean, yeah, lower high and higher high is what tells us that we have now shifted the direction, or we have now broken the trend, and we have moved from being an uptrend to a downtrend. Then we get a little bit of a liquidation here, followed by a continuation. Okay. Do you have any questions by far?
So towards the top of the okay, so on towards the left where you had your drawings on the left, at the top of the the upward impulse.
Mhm.
We had the lower high, lower low, lower high, lower or higher low, lower whatever. Yeah.
Oh,
So
yeah.
the highs and the lows, and then we had the highest highs up there.
Mhm.
Um, and then we broke the support.
Well, one thing
Um,
that I have to tell you, okay, yeah, you might call it a support, but we don't. Okay, I don't usually call them support or resistance because
the higher low.
yeah, yes. Let's just stick to high, low, and high, high.
Okay, so we broke. So whenever we started heading down, we broke the higher low.
Mhm.
Um, how do you consider that like a credible higher low to break whenever on the last impulse before that we had the strong bullish impulse like up, and then we made tweezer tops, and then we broke the higher low on that one as well, but we didn't continue with an impulse.
Oh, like we broke high lows here.
Yeah.
Okay, so there is a way to know that which one is the most credible or which one is the the highest level to expect price to bounce, and that is that is essentially by looking at higher time frames, and that is something that we are going to cover as we go on when we start looking at top-down analysis.
Okay.
Okay. Yeah, I mean that is how we are going to know, but we are going to cover that as we go on. But for starters, I just want you to we're just covering the basics, the basics essentially, okay, of what a trend
Right.
is, and yeah, and what to look for when a trend breaks, or what tells us that a trend has broken. For example, we can consider this as a trend shift on the daily time frame here, because we were making a series of lower lows and lower highs, okay, lower lows and lower highs. So we pulled back up, but then we came down, but then we got a really strong impulsive move that that broke the previous highs and lows. Okay, so this is telling us that now a trend has shifted from being a downtrend into being an uptrend. Okay, is it clear?
Yeah, we broke. Yeah, I can see on this one where we broke.
Yeah, so breaking these previous highs and lows, especially this last lower high or second last lower high, is what tells us that the trend has now shifted from being a downtrend into being an uptrend. Because a trend will only shift in direction, a trend will only shift in direction if we break the previous highs and lows, as we have been discussing. So if we have a downtrend and we get a strong impulsive move, that tells us that now the trend has shifted if we break the previous lower high and lower low. Similarly to if we have an uptrend, okay, then we get a strong impulsive move to the downside. That is what the break of the previous lower high for this case, okay, is what tells us that now the break below this previous higher high and higher low is what tells us that now price has shifted from being an uptrend into a downtrend. Okay, so this is usually done with a very strong move. Okay, a strong impulsive move like you see here. So, and we know that that the trend is made up of three phases, as we discussed earlier, that we have an impulse followed by a liquidation followed by a continuation, right? So after getting an impulse, we expect a liquidation, okay, which goes in the opposite direction, then followed by a continuation. Okay? So for example, for this case, we have got our first phase, which is the impulsive phase. Okay, so we can expect some sort of liquidation, then eventually a continuation. Okay, so we have looked at the phases of a trend, and we have looked at what makes a trend and what breaks a trend. That is the break of previous highs and lows for the case of an uptrend, and the break of previous lows, that is lower low and lower high, for the case of a downtrend. Do you have any questions until that point?
Nope.
Okay, so are you good to continue?
Yes.
Okay, so now after breaking a trend, okay, after shifting a trend, okay, if we had a downtrend, okay, after getting a strong impulsive break above, okay, we expect that price will do a liquidation, okay, and our aim to take a trade would be right at the end of this liquidation, wherever this liquidation is going to end, so that we can capitalize on that and get the bigger move of the continuation with the new upward or bullish direction of the trend. Okay, so after the break of the trend, price, after the break of a trend with an impulse like that, price will come back to test this second last lower low. Okay, this second last lower low, we call it the invalidation point. So price will pull back to test this second last lower low and then proceed with the original direction. Okay, similarly to a bullish trend, if it is a bullish trend like that, if we get a strong break below, okay, so that means we have got the impulsive move that has broken the trend, okay. So we expect the liquidation phase to come and test this last or second last lower high, okay, and then continue with this original new direction, okay. So if you see price in a is trading in a liquidative move, this tells us that price is going to test this second last broken higher high for the case of a bullish trend, and it's going to test the last lower low for the case of a bearish trend. Okay. Am I making sense?
Yes.
Yeah. So I'm going to repeat that one more time. This is very, very, very important. This is the basis of over 90% of the trades that I take. Okay, so if price is trading in a downtrend, okay, then we get a strong impulsive break. We expect the liquidation to come and tap and test this second last lower high. Okay, so if we get a liquidative move like that, we expect it to come and test this last lower high and then proceed with the overall direction of the trend. Okay, same to if we have an uptrend and we get a strong break below with an impulse. So this immediately tells you that the trend has shifted, because you know that the first phase of a trend is an impulse. Okay, so once we start getting a liquidation, we know that this liquidation or pullback, whatever, is going to test this second last higher high. Okay, so for a case of a bearish trend, it becomes the second last lower low, and for the case of a downtrend, it becomes the second last lower low, and for the case of an uptrend, it becomes the second last higher high. So once price reaches to this level, it will immediately tap that level and continue with the overall direction. So this is where we expect to take a short trade, and we expect after if it was previously an uptrend that has turned to downtrend, we expect it to come and do a structural retest, or to come and test the lows of where that uptrend initially began. Okay, and if it is a downtrend, for example, if for the case of this downtrend that we had, if this was the highs or the resistance that the downtrend started, okay, if we break structure, as we did by breaking the previous lower highs and lower lows, we expect price to come and test this level, the second last lower low, which is we call it the invalidation point, and then continue all the way back to test these highs of where this downtrend initially started from. Okay?
Yeah.
Yeah. So let's look at a few examples of that. The most recent example was, okay, let's take a look at Euro USD on the weekly time frame. Okay, so from the weekly time frame, price was in a downtrend where we were making a series of lower highs and lower lows. Okay, lower highs and lower lows, lower highs and lower lows. Okay, then we got this strong impulse. Okay, we got this strong impulsive move. Okay, which broke the previous highs and lows. So this immediately tells us that price has shifted its direction from being a downtrend into an uptrend. Okay, but we know that after breaking this trend, price should pull back to come and test our invalidation point, which is our the second last lower low. Okay, our second last lower low down here, because this we made a low, lower high, lower low, so this was the second last lower low. Okay, so price pulled back and then came back to test this last lower low, and as you can see, once price reaches to this level or this invalidation point, it immediately rejects and continues now with the overall direction. So if you would have been looking at this trade from the weekly time frame, that means you'll be waiting to buy right at the bottom or right at this price level, okay? And price just gets there and or if you have like a pending order or if you're doing direct market execution, then it's about a 250 pip move with just with a stop loss of less than 10 pips essentially. Okay, so if you had a 10 pip stop loss right there, that means you would be safe. So price comes back and tests this this level and then continues with the original new direction. So you may ask that why did price pull back? So the thing is that after rejecting this invalidation point, okay, price is free to do anything it can as long as it doesn't go back below this, like it will never get a candle closing below this weekly second last lower low. It is highly unlikely before going all the way back up to test these highs where this downtrend initially began. Okay, as we know that price moves in a wave, so price can go up, like price can rally and pull back, okay, but it will always find its way all the way up to test these highs of where it started. This is the reason why you want to be very accurate in your trading so that you can avoid drawdowns and stuff, okay? So this is the first example. Let's look at another example. Where we'll start. Okay, let's look at gold. Gold, we had an example of a trade here in the 4-hour, okay, where price was making a series of highs and lows. So you can see we had a low, lower high, lower low, lower high. Then we made a new low, okay. Then we had an impulse followed by a continuation, okay, which broke the previous highs and lows. Okay. Are you there?
Yeah.
Yeah. So after breaking this trend, naturally we expect price will pull back to come and test our invalidation point because we know that if we have a downtrend, then we break above it, okay? So price will pull back to just this second last lower high and then continue with the new direction, okay? So after breaking this, price eventually did come back down to test this level here, which was our second last lower high, okay? This was lower low, then a lower high, then we made a new low, okay? So after breaking above, okay, so we just all have to do is wait for price to come back and test this lower low before eventually proceeding with its new bias or with its new direction, so to say. Okay, so for example, for the case of this trade, if you were to take this trade, that means that you can ride with the price all the way up to where the trend started, because this bearish trend started with started from up here. Okay, we broke these previous highs and lows. Although now you can argue that why didn't we come to test this last lower high? Yeah, But then there is a reason for this as to why sometimes price doesn't pull back to test this level or this invalidation. Something that we are going to look at as we go deeper. But anyways, after breaking back above these highs, okay, price came to test this second last lower high, and then continued with its original direction. So that means that if you were available to trade this, or if you were trading EURUSD at this point, okay, so that means you would have taken buys right at the candle closure at our invalidation point, and you can see that price just made one single tap, like one single wick, all the way to this invalidation point. So that means you could even have had like a 5 or 10 pip stop loss, and then you could have just held the trade all the way up, because we know that after breaking this structure, we are now targeting the highs of where the trend started. Okay, so you could have held it all the way to the top, about 475 pips, with just a stop loss of under 15 pips, because as you can see, price just came in and tapped or just touched this invalidation point, what would otherwise look like, I don't know, a weak entry, okay? But it is all very calculated, and it is all very understandable once you come to understand really what happens between behind the scenes. Well, once you actually come to understand what a trend really is, and what breaks a trend, and what invalidates a trend. Okay, so let's maybe have a look at another example. Yeah, another example is so I'm only looking at examples of the trades that I've taken, but as you can see, we have looked at examples across multiple time frames. We have looked at EURUSD that was on the weekly, and let's have a look at Euro NZD. This is on the 4-hour. Okay, if we can do like a replay here. Okay, so if we look at this price structure, okay, we see that price was making a series of highs and lows, higher high and higher low, higher high, higher low, higher high, okay. Then we had a strong impulse, okay, and we know that if we had an uptrend, okay, then we get a strong impulse that breaks the previous highs and lows. So now we have shifted from being an uptrend to a downtrend. But this is just the first phase, which is the impulsive phase. Okay, we're expecting price to go to the second phase, or the liquidation phase, or retracement phase, or pullback phase. Okay, to come back to test this second last higher high, which is where the liquidation will end, and then we can continue with our trend. So we will be looking to take a buy trade from this point here, the last higher high on this kind of scenario, which is what had happened here. Okay, So we had a series of highs and lows. Then price broke this previous higher high and higher low. Okay, this is a high, this is a low, this is a high. Okay, do you understand how to identify highs and lows?
Yes.
Great, great. Yeah. So after breaking, that means we're expecting price to come and test our invalidation point, which is this last higher high, right? So as you can see, eventually price started liquidating. With a ton of fake outs, okay? But eventually, okay, let's look at this situation that price came back and tapped and touched right at this price level, which is our invalidation point. And then after that, you see, and then after that, price continued with its direction. Okay, so that means that here we have a complete trend. We have an impulse, liquidation, and continuation. Okay. So that means that you would have taken a sell trade to at least these lows, okay, which is about 133 pips essentially, with a 5 or 10 pips stop loss just to be safe. But you see that price just made one tap at that price level, which is our invalidation point, and then proceeded with the overall direction. Okay. Do you have any questions?
No, that was good. I like that example because it I followed along really well, and then it followed through.
Yeah. So so you're if you don't have any questions, I think it would be okay if we ended this webinar here for today, because really too much information might be a lot to take in, and it might end up getting you confused. So I'm going to give you 2 assignments with you are going to go on the chat. So the first assignment, the one that I told you previously, it is an easy one. Just spot the areas where price made an impulse, followed by a liquidation and a continuation. Okay? Don't worry about anything else. Just show me where price made an, like here, price made an impulse and a liquidation and a continuation. Okay? Or you can consider all this as an impulse and a liquidation, although the continuation was kind of short. Okay? Or for example, here price made an impulse, then a liquidation, continuation, liquidation, continuation, liquidation, continuation. Okay, so that is your first assignment. I'm expecting, hoping that you, I need you to do as many examples of this as you can. Okay.
Yeah.
Yeah. And now I don't know whether I should give. I don't know whether you should do that first, because the second assignment would be for you to spot the areas where trend where price broke structure and came back to test the invalidation point, then proceeded with the trend. Okay. Or for the case of an uptrend, where price broke structure, then came back to test the invalidation point, okay, which is the second higher high as we discussed, then continue with the overall trend now. Okay. So maybe I think you should just do the first assignment first. Then we see your progress. Then if it all goes well, then we will discuss the examples that you have sent on the next webinar. Then after that, you can go on to do this second assignment. And once you complete and are convinced that you have got it correctly, then you have essentially completed your first phase. Then we'll go to the second phase, which is really a short one, where we'll just be talking about channels. Then after that, we'll go to your last phase, where we will look at top-down analysis. So on that, we will look at essentially higher time frames and lower time frames, and how to relate the higher time frame trend and lower time frame price action, so that we can be able to take a trade on lower time frame, but then for that trade to be in the direction of the higher time frame trend, so that we can hold it for much longer in the direction of the higher time frames. So do you have any questions? So I think you should just do the first assignment first, then on the next webinar we will look at the examples that you have sent. If it's good, then you will go on to the second one. Is that okay?
Yeah, so the first one is just find impulse, liquidation, and then continuation.
Yes.
And then the second one tomorrow is the when we're breaking, and retesting, and then going down again.
Yes, but
We'll do that tomorrow.
Yes, we'll do that in tomorrow's webinar, after confirming that you have fully understood this first phase of impulse liquidation and continuation. Okay.
All right. Yep, and then sounds good. I spend like a lot of time on the charts just because if I'm bored, I just like enjoy analyzing. I just like it's just so I'll probably be on the charts like at least 5 hours ish of today. Not straight. I don't do it straight. I just go on and
go on. Yeah, me too.
But so yeah, definitely.
Oh, okay. And how did you find the webinar and the lesson?
I liked it a lot. It's very similar to like a combination of maybe a couple of things that I've learned through a past mentorship. That his was more of a scam mentorship, where he just gathered in like hundreds of people and then left when he felt like he had enough people. Like he just disappeared. But he shared like 30 plus maybe books on Google Drive, and I have them all saved, and I read through like at least half of them.
Oh boy.
And he taught a lot of them. So like it's very similar to like one in specific, but also like both parts, like the lower highs and lower lows, and then we break and we start forming higher lows and higher highs. That was like a specific book that I went through, and it never really clicked because I just I didn't have like anyone to like teach it correctly
Yeah,
or
yeah,
video.
like a guidance or something.
Yeah, but yeah,
Oh, okay.
I like this though. I like this.
Oh, okay. I'm glad you liked it. So, so you go on and do those examples. Then, so the webinar will be same time tomorrow. Yeah.
Yeah, same time tomorrow.
Okay. So if you don't have any other questions, I think we should call it a day then.
Awesome.
Okay. Enjoy the rest of your day. It's actually 8 p.m. here.
8 p.m. To here it's 9:30 now.
Oh, okay. Then, you have a great day then.
Thank you. You too.
Okay. I will send you the link to this webinar just in case you need to have a look for reference and stuff. I'll send you the link that you can download it.
Okay, awesome. Awesome. Thank you.
Okay, bye. Take care.
Thank you. You too. Bye bye.